Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, it has definitely been a roller coaster of a week, guys. Bitcoin is down over 10% on the week. It's down 17% in the last month. And the market is just, not really catching a bid here. It's been a rough go. Interest rates, if you didn't catch it, are staying steady per the FOMC meeting that was just earlier today. We're continuing to see some, outflows in Bitcoin products. And I mean, a lot of the geopolitical stuff just still continues to happen. If you have been paying attention to crypto, lots of, there's still a lot of things going on with meme coins, with Bitcoin runes. But we're going to talk about some new products this week. It has been a little slower on the news front, but, not without the requisite crypto drama. So I'm going to actually start talking about Rez or Renzo. So Renzo is the second largest liquid staking protocol. They have about $3 billion in TVL. They launched their token yesterday, and it basically flopped right out of the gate. So the project released their token supply and schedule last week. However, they basically gave a 5% of of their token supply. Only 5% was allocated to current users via the airdrop. However, about over 60% of the supply was allocated to investors and team members. A pie chart of the token allocation on Renzo's blog was basically really misleading. It showed this over 60% slice accounting for only 50%, and then it displayed the 5% and 2.5% slices as like 20%. So a lot of people were circulating this chart around Twitter, is really upset. To add insult to injury, Renzo also announced that those who purchased tokens through Binance Launchpad would receive them on April 30th, but airdrop claimants weren't going to be able to claim their tokens until May 2nd. So a lot of people were definitely feeling salty about that one. So following public outcry, Renzo decided to replace this pie chart, which was good. That was a chart. That was a crime against charts. And they also, quickly decided to change the date so that the launch pad would launch on the same day as the airdrop claim, which was yesterday. They also increased the airdrop allocation to 7% from 5%. The token has not fared well despite the tweaks, and it's down over 40% since the launch yesterday. I do think it's worth highlighting. A lot of people have been unhappy with recent airdrop allocations and how airdrops are being handled, and it's definitely being reflected in the price performance of these new issues. So Renzo, like I said, down 40%. We're actually going to talk about sort of another new issue next. So this is also a little complex, but we're going to talk about Pendle. So Pendle is a DeFi protocol. They saw their token crash this week after a highly anticipated airdrop that once again disappointed the market's expectations. So Monday, Eigenlayer, which is the restaking protocol on Ethereum, they amassed like $15 billion in TVL at their peak. They announced their airdrop allocations for current users. So basically, users who deposited assets into Pendle's yield trading protocol were doing so in order to like maximize their potential airdrop that they could earn from Eigenlayer. So think of it as like a yield aggregator that was built to like help them maximize the benefits of their Eigenlayer deposits. So first off, the airdrop announcement was pretty disappointing from Eigenlayer, since the tokens aren't going to immediately be transferable. They're therefore not sellable. And then they also said, hey, you can't also sell them at the start, which a lot of people were really unhappy about. Very understandable. The project also barred US users from claiming the airdrop, although the project itself did not geofence users from depositing assets from these jurisdictions. Finally, there was a set of very confusing wording in their documents, which made a lot of users believe that more complex DeFi protocols, aka Pendle, would be excluded from the airdrop round. In response, the Pendle token ended up flash crashing about like 17%. It's unfortunately stayed down there since this has happened. It's down 30%, 31% overall. Which is a shame. Pendle's probably one of the more, exciting DeFi projects in the last few months. It's had a lot more potential in terms of, usage and usability. But it just kind of goes to show that the market is really unhappy right now with the state of airdrops. Like I said, Eigenlayer is definitely a huge disappointment. I think we will kind of continue to see in the coming days how this works out in their favor. Already, there's a lot of people withdrawing from the protocol because they don't want to, put more money towards the project where they're not going to earn anything and they're not going to be able to unlock their tokens for an undesignated amount of time. So, like I said, Pendle's down a lot, down 31% for the week. All right. Last up, we are going to talk about Binance, so our BNB. So last week, BNB Chain announced that they're going to be enabling liquid staking on their platform either in April or May of this year. So as a delegated proof of stake protocol, liquid staking would allow, like on Ethereum, users to deposit their BNB into a contract to be staked, and then they would receive a derivative product of BNB that they could use in DeFi and other places as collateral, etc. So that would be, really good to expand the usability of BNB and Binance's ecosystem. Also yesterday, Binance's founder, CZ, Changpeng Zhao, was sentenced to 4 months in prison. For those who haven't caught up on the drama, CZ was arrested late last year by the U.S. Department of Justice, and he was charged by U.S. prosecutors for violating Bank Secrecy Act and AML anti-money laundering laws as the CEO of Binance. They accuse them of, turning a blind eye, not implementing a strong enough program. The exchange and CZ personally pled guilty to the charges. CZ personally paid a $50 million fine, and Binance itself paid a $4.3 billion fine. And he agreed to step down from the exchange's day-to-day operations. A lot of people see this as a win because prosecutors were demanding that he serve a 36-month prison sentence. His defense attorney said that he should just get probation. So 4 months seems a much better deal for him. So a lot of folks are happy to see that. Binance is only down 8%. All right, guys, that's all I got for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving